Hello everyone, welcome back to Investing for the Common Man, where I try to help you save your most valuable resource. No, not your money, but your time. Now you might be asking, if I'm trying to save time, why even bother with investing? It's too complicated and I'll probably just end up losing money or making a couple of measly pennies. That was basically my mindset until a few years ago. But after spending a little time, or maybe I should say investing a little time, in educating myself on the wonderful world of investing, I found that financial fantasies that seemed ludicrous to me at the time are now surprisingly within my reach. Now don't get me wrong, I'm not saying that I'm going to make you rich. In fact, trying to get rich quick is probably the easiest way to lose your hard-earned money on unwise or risky investments. Some people think the stock market is like gambling, and well, it can be if you just start blindly throwing money around at every company with a hip name. If you're going to invest, then spend the time to do your research and be smart about it. I don't care if you have $100 or $100,000 to your name. The beautiful thing about investing is that you can personally customize and fine-tune your investment strategy to fit your current financial status, stage of life, risk tolerance, time commitment, and even how high of a return you're looking for on your investments. You can be as passive or active with your investments as you want. If you have a full-time day job, a family, kids, then you might want to focus on passive investing strategies that can keep working for you even if you ignore them for a few months at a time. Maybe you're single or have a job with non-traditional hours like myself and are looking for aggressive growth or supplemental income. If that is the case, a more hands-on, active investing approach is something you might want to explore. I'll be making a whole video breaking down passive and active investing strategies and how to choose which ones or combinations are right for you. If that interests you, go ahead and click that subscribe button so you don't miss it. Some of you might be thinking, well, I try to tuck money away in my savings account whenever I can. Shouldn't that be enough? Well, according to the FDIC, the current average interest rate on savings accounts is 0.09%. That means if you leave $10,000 in a saving account for a whole year, you'll only make a whopping $9. It is completely absurd to tie up that much money for a whole year and barely have enough cash to buy a burrito at Chipotle. To put that into perspective, your bank might charge you the average credit card interest rate of 21.28% if you don't pay off your credit card in full every single month. Basically what I'm saying is, in terms of investing your money, most savings accounts are complete garbage. Now, there are a few high-yield savings accounts that you can get with rates up to 1.9%, which is better, but that isn't even enough to keep up with inflation. As a rule of thumb, if you are not making an average of at least 5% a year on all the money that you have saved up, then you're either having terrible luck or you're doing it wrong. In 2019, the S&P 500, a stock market index that tracks the general market, gained over 30% in value. So if in January of last year, you had invested that same $10,000 in the S&P 500, you would have made over $3,000 in profit, enough to buy 3 brand new iPad Pros, which sure beats our measly burrito from your run-of-the-mill savings account. Now, I'm not going to guarantee you an Christmas this year because 2019 was an abnormally great year for the stock market. But over the past 90 years, the S&P 500 has had a solid average annual return of 8 to 10%. The S&P 500 is always a strong bet, but there are a multitude of other investing strategies, including buying stocks of individual companies that could outperform the overall market. Companies like Apple, AMD, or Tesla have all doubled or more than doubled in value in the past 12 months. I'll get more into specific investing methods and strategies in future videos, but I hope that this illustrates how much more effective it is to invest your savings instead of letting the stingy banks hold on to them for little in return. Recently in political spheres, there have been complaints that only the incredibly wealthy benefit from the stock market because most Americans are not wealthy enough to invest their money. While this is largely untrue, regardless of your political affiliations or thoughts on the ideologies of capitalism, it is defeatist to allow the daunting wealth and success of others to discourage you from educating yourself enough to take charge of your own financial future. With a little bit of time and critical thinking, you can benefit off the same exact systems that the incredibly wealthy do. Why let all the billionaires have all the fun? Well, that's it for today. But if I have you convinced and you're ready to get started, there are some links in the description below to get you a couple shares of stock absolutely free when you open an account on one of these beginner-friendly platforms. We'll talk more about them in the next video, so please don't forget to subscribe and hit that like button.